Hello, everyone. Welcome to another enriching segment of our weekend series dedicated to price action based technical analysis. In today's session, we will be delving into the USDJPY chart, focusing on the recent trading dynamics. Despite the hawkish comments by the Bank of Japan's governor regarding the 2% inflation target, last week's trading setup did not yield significant traction at all. The robust US economy juxtaposed with decelerating Japanese inflation numbers may contribute to a potential weakening of the Japanese yen in the coming week, thus providing a tailwind for the USDJPY asset. Anticipating a strong bullish sentiment amidst unclear path surrounding uncertainty around the Fed's potential rate cuts, our analysis in this video will leverage technical and fundamental tools such as the economic calendar, trend lines, key levels, and chart patterns to uncover the potential trajectory of price action in the coming week. Before we proceed, it is crucial to underline that this presentation is purely for educational purposes and should not be considered as financial advice. While our aim is to provide insight and enhance your comprehension of price action analysis, always exercise caution and consider consulting a financial advisor before making any investment decisions. Now, with the groundwork laid, let's delve right into the business. Now, the first thing we are going to be doing this week is to run through the daily time frame, where I will be taking into consideration the nature of price action since the beginning of last year. That's an historical data of about 12 to 13 months, which of course reveals that the nature of price action has been on a strong bullish momentum. And in that regard, I was able to connect a series of higher lows here, giving us a beautiful ascending trend line to buttress the strength of the buyers in this market. In addition to this trend line, we have our key level for this week, which is situated at that psychological area around the 148.800 level, which we shall be using as a yardstick to guide our trading decisions for this week. And of course, if you look at how crucial this level is, you'll see how it had played a major role in determining the direction of price action since the month of September of last year. At a point in the month of September/November, it was more of a buying niche, as you will see right here, how this area had served as a platform to push price to find new high towards the end of last year's trading session, as you will see here. And not until the last couple of days into the month of November that we saw price break down the that level to the downside, and since that moment price action has remained below this level to further emphasize the strength of the sellers at that point in time. However, in the last 1 to 2 weeks, price action, you will see, approached that level, but unfortunately for the buyers, they found a limiting barrier here, making it difficult for buyers to break through that area. Now, during the course of last week's trading session, following the hawkish remarks by the Bank of Japan governor, confirming that the interest rate target is gradually coming into fruition and opening up chances for the Bank of Japan to pivot from their current ultra-loose monetary policy, market participants were very positive in favor of the yen, but as you will see, the resilient US economy and of course the uncertainty surrounding the timing of the federal rate cuts further threw a clog in the wheel for the Japanese yen. As you will see, the bearish traction from last week didn't move significantly well at all. So going into the new week, how do we intend to position ourselves for the next move? Well, the question we will be asking at this juncture is, how are we going to see a situation where price will break out of our key level to the upside, inciting new waves of bullish momentum? Or will the 148.800 area continue to serve as a barrier, maybe to incite a sell-off back into this ascending trend line in the meantime? Now, to answer this question, I have a simple setup identified on the 4 hours time frame, which we will be using to guide our decisions for next week. But before we delve into that detail, it's important we keep tabs with the fundamental factors that will be affecting this market sentiment in the coming week. And for those of you who have been with me for a while, you will all understand that by monitoring the economic calendar, we aim to pinpoint potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information and in fact better timing to position ourselves in such a way that we can capitalize on any potential move prior, during, or even after this economic event. Now, based on the assets on our watch list, we shall be focusing on economic features from both the United States and the Japanese economic docket. However, and unfortunately for the Japanese yen, there are no high impactful events that they could bank on to give some traction to this asset. So this week is laced with a handful of high impactful events from the United States. And the first one on the list here is coming in on Wednesday, January 31st, and that is the ADP employment change, which is a monthly economic report that provides an estimate of the change in non-farm private employment in the United States. And of course, it is known that positive ADP figures indicate job growth, often boost market sentiment as they suggest a healthier labor market. Then fast forward to later on that day, we have the Fed monetary policy statement, which is a comprehensive assessment provided by the Federal Reserve detailing the economic outlook and the rationale behind monetary policy decisions. Then simultaneously, we have the Fed interest rate decision, another high impactful event which gives the outcome of the Federal Reserve's meeting, where they decide whether to change or maintain the current interest rate. Now, it's important to note that this decision has a significant impact on market sentiment as it reflects the Fed's assessment of the US economic conditions, and any changes can influence borrowing costs, investment, and overall economic activity. Finally, on that day, we have the FOMC press conference, an event where the Fed chairman, Powell, will communicate the Fed's monetary policy decisions, economic outlook, and of course, answer questions from the media. And it's important to note that investors will closely analyze his statement for insights into future interest rate changes and overall economic conditions. Now, fast forward to Thursday, February 1st, we will be looking at the ISM manufacturing PMI, which of course is also a monthly report that gives an insight into the business activity in the United States manufacturing sector. Then on Friday, February 2nd, we have the averagely hourly earnings, which is a significant indicator of the labor cost inflation and of the tightness of the labor market. Now, the last one on the list is the non-farm payroll, which is one of the most popular events that majority in the market will look forward to. And of course, this data presents the number of new jobs created in the US economy during the previous month in all non-agricultural businesses. So these are the high impactful events we will be looking forward to this week, and as technical traders we understand that the anticipation of this event alone has a tendency of influencing the market sentiment, which of course would reflect on the chart as price action. Talking about price action, we shall scale down into the 4 hours time frame, where I do have a simple trading setup that we will be using for this week. And what I did on the 4 hours time frame was to take into consideration the nature of price action since the beginning of this year 2024. And in fact, it's quite clear that the market has begun the year on a bullish note, as you will see price go through consistent and uniform higher lows. And when we connected the series of higher lows, we have another ascending trend line here, which of course has been respected, and at no point in time has price action broken down this ascending trend line at all to further emphasize the strength of the buyers in this market. Now, you know how we use our ascending trend lines in this community. As long as price action remains above the ascending trend line, we shall continue to look out for patterns and structures that support the idea of buying these assets. Now, besides the ascending trend line, there are a couple of levels here which we will be using. And one thing you will notice here is that since in the last couple of weeks in this market, you will see that after price tested that new high for the year at our key level area, the 148.800, price action has remained confined within that range between that key level and the 146.700 area to emphasize the level of indecision going on in the market. Well, for me, if we consider the prior leading price action, that is the uptrend character of this market, this range we have here has a high chance of evolving into an uptrend continuation pattern, where the breakout of the resistance line will be all we need to capitalize on an uptrend continuation. And in fact, considering that price still remains above the ascending trend line, so we shall be looking forward to see if price will ever break out of that structure to give us an opportunity to join an uptrend. However, in as much as we are considering the uptrend potential, we want to keep our options as open as possible. Now, in that regard, we also want to consider the potentials the sellers also have, as you will see that since price tested that high, buyers have been finding a strong resistance from the sellers to push price to the upside. So in that regard, what is it that we are going to see on this chart that will make us change our bias from bullish to bearish? Well, first of all, you know how we use our ranges. Of course, we want to see price break down the support line to give us an opportunity to sell. That is, break down the 146.700 for an opportunity to sell. However, if it so happens that price action breaks down and retests the ascending trend line, in fact, the breakdown of this ascending trend line will be the first time price action will be breaking down that structure since the beginning of the year. Then if we can see some convincing setups on our lower time frame, like series of lower lows and lower highs, then we could actually capitalize on that bearish momentum even before the breakdown of the 146.700 level happens. But trust me, I will be with you in the comment section of both my TradingView and Telegram platforms to give you updates as at when due. If you have found this content helpful and useful in making your independent trading decisions for this week, I will greatly appreciate your support by giving the video a thumbs up. Your likes are valuable to me, and in fact, it also helps the algorithm promote the video to a wider audience of traders who may find the material beneficial. Thank you in advance for doing so. If you haven't already, I encourage you to follow me on this channel for more of this content. By subscribing, you will always stay updated with the latest ideas I share, and of course receive notifications whenever I upload new videos and commentaries. See you all in the comment section on Monday morning as we get prepared for the new week. Do have a wonderful evening, everyone. Bye-bye.